While it is almost a certainty that tomorrow the Federal Reserve will raise rates by 0.25%, the question is, following that, will we get any information as to whether or not the monetary policy of the Federal Reserve has become more hawkish or more dovish? Will they announce a pause or an end to rate hikes? Will they announce another rate hike this year? That's something we'll find out in less than 24 hours. Hello, traders. Gary Wagner here. It is 11:20 in Honolulu, 5:20 in New York on Tuesday, 25th day of July, 2023, and this is the Daily Report for Gold and Silver. Traders, today the July FOMC meeting began. It will conclude tomorrow, where it is widely expected that the Federal Reserve will enact and announce a 0.25% rate hike. The question is whether they'll make any veiled reference to either a upcoming pause or more rate hikes ahead. Currently, gold has risen moderately in anticipation of that fact, with the August contract at $1,966.60, up $4.40. An interesting day in the gold market. Gold traded to the lowest low that it's been to in the last 4 trading days. At the same time, it broke through the 50-day moving average and came close to challenging the 100-day moving average that is currently at $1,969.50. The question is, while it is a given that the Fed will raise rates tomorrow by 25%, what comments will they make either in the statement or Powell's press conference that allows us to gain more insight into their future forward guidance in regards to their monetary policy? Will they make any veiled reference to the fact that they believe this could be the last rate hike of the year, or will they say that it is possible that we will have one more rate hike this year as originally announced? Because the difference in terms of which answer or insight we receive will be a key determining factor on which way gold moves tomorrow. In all likelihood, we will witness an exceptional performance by Powell, as they do in Cirque du Soleil, walking a tightrope, saying as little as possible and moving to his pat answers that the decisions by the Federal Reserve will be data dependent, and as that data changes, their forward guidance will react accordingly. So the question becomes, will the outcome tomorrow give us the ammunition needed to place a trade? Obviously, if he makes any mention that we are most likely done with raising rates throughout this year, we would see gold take off tremendously. In other words, any statement by Powell that we could be close to the end of the rate hike cycle could take gold definitely to 1980, as high as $2,000 per ounce over the next 7 to 8 trading days. However, the likelihood that he is that forthcoming and transparent is extremely remote, and if it happens, by the time we sent out a trade alert, it would be much too late for you to act on. So, for those of you that will be watching the press conference, if such a statement comes out, I recommend that you initiate a long position. If you do, you would put it below today's low. Today's low comes in at approximately 1950. The dollar had very little input in today's gain in gold, with the dollar index declining by 0.07%, and the index is currently fixed at 101.015. We are looking at a weekly chart of the dollar index, and we can identify a 2 to 3 day candlestick pattern called a piercing line. In the case of this example, it is a variation. I'll explain that in a second. The definition of a piercing line is following a defined downtrend. We meet that criteria. We get an extremely exaggerated sell-off, a long red candle, which is this one here. The following candle must be green. It should open below the close of the red candle. And as you can see, it opens right around it, maybe even a tick or two above it. But it does close above the midpoint, and that is a solid piercing line. We are now waiting for confirmation, which means that throughout the rest of the week, we would get a much longer green candle. How would that affect gold? Well, obviously, there's a negative correlation, but we have seen many instances recently where the dollar has moved higher and so has gold. We have not seen that exact correlation that we would typically see, except when we had a tremendous sell-off in the dollar, which occurred from October of last year up till about the last 2 weeks when it hit this bottom. So I think that even with dollar strength, gold could move substantially higher if the right fundamentals are at play, meaning a conclusion to rate hikes. Lastly, silver had a respectable gain today of about 28 cents, getting back all of yesterday's decline. The September contract is currently fixed at $24.86. Lastly, a look at silver. Silver has been on an absolute tear since the middle of June when it broke below $22.40 and then traded to a high just above $25 per ounce. Since then, it has come down considerably, with pricing currently at $24.83. This dark black line represents this top here, as well as these sets of lows here, and they represent resistance, but now that we've broken through that, potential support. Our current short-term resistance is just below $25, a break above that, and I think that we could easily see silver move back to $25.40. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.